All right, what up, everyone? Welcome back to another episode of Wall Street Rundown. We excuse the tardy today. It's been a hectic day for both of us, man. But welcome back to another episode of Wall Street Rundown. I got my co-host with me, Wale. What's good, man?
What's good, everybody?
Bro, bro, I know you mad, man.
Don't get don't don't
The
get
whole
don't
snowflake.
don't get me started. Don't get me started, man. We'll get into it, but
Yeah, but you did that analysis really well, man. I know you broke down snowflakes a couple of weeks, maybe a couple of weeks ago, maybe a couple of months ago, even on your no, a couple of weeks ago on your Instagram.
no, this was yesterday.
This was yesterday. Oh, never mind. That was yesterday. I feel like you've been talking about Snowflake for a while though. Like
Ye-
all the cybersecurity companies and stuff, we've been talking about it for a while, you know?
So Snowflake is not necessarily cybersecurity. It's
Mhm.
more so like data management and organization.
Okay, okay.
So I think Snowflake plays in the same sandbox as Datadog and Databricks.
Right, and that's what I mean. Like Datadog is actually in the
Yeah.
security too, right? So it's like that's I kind of equate them to that because they kind of
Okay.
have similar dash. They have similar
Okay.
dash where they have like similar tasks that they can be able to catch like certain things a lot earlier. It's mostly in the data sector, but they can catch like if something's happening basically.
Gotcha. Yeah.
Yeah.
But and Datadog's last earnings, that thing took off,
Yeah.
and I did not. Yeah, just let's not talk about it. I might start crying on today's show.
No crying, man. Don't cry over spilled milk. Oh man, but honestly, man, like this move on Snowflake is amazing. Like if you guys go watch it right now after market hours, it's like it is just crazy move, man. But overall, man, if you look at the stock market this week, I mean, we have some good movers this week. MU, I mean, if you guys pay attention to MU yesterday, MU was rocking. Like that thing just skyrocketed out of nowhere during the market hours and also after market, you know, went from I think when I was looking at MU it was like around maybe $400 or $500. Now that thing's like $900, you know. But overall, man, like the market like hit a milestone today. All three major indexes closed at all-time highs on the exact same day. Like if you look at all three major indexes, Dow Jones, S&P, and Nasdaq, they all closed at all-time high today, which is crazy, man. I mean, but if you look at the broader market, not everybody was participating in this rally. Again, you know, it's very, very concentrated on specific stocks that were moving like crazy, right? So again, if you look at the Dow Jones, 182.60 points, that's 0.36% gain. S&P 100 was closed at 0.2%, Nasdaq at 0.07%. I mean, overall, man, like this has been like an interesting short week because you know Monday we had a day off, but overall, man, it's been interesting. Tomorrow we have PCE inflation forecast, so we'll see if that's gonna you know jerk the market a little bit. We don't know, but we shall see, man. But Wale, man, let's talk about this week, man, because it's like there's some crazy movies out there.
Yeah. So we'll start off with the obvious is Micron.
Yeah.
Micron and the other memory names have just been on
Mm.
a tear. And people keep saying, so this is the crazy thing about Micron is that there's two ways to look at, or there's, I wouldn't say there's two ways, but there's two viewpoints you can take when you're looking at Micron. If you look at current PE, the current PE ratio for Micron is pretty high because
Yeah.
of just how it's moved over the last. I mean, this was a $311 stock back at the end of March. It
Mm-hmm.
is it hit a high of $956 today. So you're talking about a stock that's more than doubled in less than 2 months. And people keep saying that the demand, like they're capacity constrained, and the demand is just ridiculous. Like
Mm-hmm.
it's just ridiculous. And from a current PE standpoint, you look at Micron and you're like, oh, this is expensive. But if you look at their forward PE, so based on what their projections are, based on what their earnings per share projections are over the next couple of years, I think someone was saying that the PE is only 10 times. That's cheap for a tech name.
That is that is cheap.
That's very cheap. So if you
Yeah.
look at it from a forward earnings potential perspective, the stock looks cheap. If
Yep.
you look at a current earnings perspective, it looks expensive. Now, I always say that stocks are forward pricing assets. People are looking at what you're going to do in the future, which is
Absolutely.
which is why this run has gone the way it's gone. But you also have to kind of look at, okay, what have you also done, right? Because you can't just like negate what the company has done so far. So when you kind of like, I guess like meet it in the middle, you look at forward PE, you look at current PE, and you kind of say, okay, where should this stock be trading? I mean, they have a $1,600 price target, I think from UBS. I don't know if it was UBS, but some analyst came out and said, yeah, this stock is going to 1,600. And yesterday it made a move, um, like an 18% move in one day.
Yep. Yep.
And now they have joined the $1 trillion market
Trillion
cap
dollar
club.
market cap. Yep.
And then also SK Hynix, which is another memory company that is in competition with Micron, but they're out in, I think it's Korea. They also hit the $1 trillion market cap mark. Samsung also hit the $1 trillion market cap
Market cap.
mark.
Yep.
So, and I know Samsung does not trade on US exchanges, and I don't think SK Hynix trades on US exchanges. But one way you can get exposure to both those companies, I want to say one is the DRAM
The
ETF,
ETF. Yep.
the
Yep.
DRAM ETF, and another one is EEM.
Hmm.
So EEM holds about 5.4% in SK Hynix and less than 1%, actually no, 7% in Samsung. So yeah, so that's probably why EEM has been on a complete tear this year compared to SPY and
Yep.
QQQ. But
Yep.
man, the memory story, I just I don't know what else to say because these moves have just been crazy. I mean, you got Micron, you got STX, you got WDC, and then you've got SanDisk. All those names have just, I call them the Fantastic Four. All those names have just been moving higher and higher and higher. And the moment you think the momentum is going to stop,
Hmm.
all it does is
Yep.
take a breather and then it just keeps going. So,
Yep. Yep.
yeah.
Yep.
Now I will say this, if you anticipate that Micron sales are going to increase, Micron is, going to hit that $1,600 price target that some analysts are projecting. Maybe this is a good time to start looking at who are Micron's partners. Who do they work with when it comes to building their memory, their main
Yep.
product? Are these publicly traded companies? So, that might lead you to finding some opportunities that no one else might be talking about. That's
Facts.
that's kind of how I found BRT a couple years ago because of their partnership with NVIDIA. That's how I found ASX and
Mhm.
AMKR, which over the last 3 months are up 70 and 50 something percent each. So, when you think of these big names that continue to do well, you know, look at who their partners might be. Who are they working with to get these
Facts.
products out? Because that might lead to some gems that nobody's really talking about.
Yep, yep. Now, let me ask you this with because we're seeing some rotation now, right? So we went from the big names, NVIDIA, creating the
Hmm.
chips, designing the chip, and all that stuff. Then we saw the refineries or whatever we call them, AMD, Intel. Those already kind of they're having their move right now. But now we're seeing the memory is joining in. They're starting to move too. What is the next in that AI infrastructure? You know what I mean? So we are seeing the progression is moving down now. So it started at the top with all the designers, then it went down to the people who actually make the chip. Then now it's like, okay, we need to figure out memory, data centers, and all these different things. But now, what is the natural progression of that? Like, what do you think is going to be like the next sector or the next group of stock to be keeping an eye on?
I think the next sector that I would be keeping an eye on, I think we talked about power, but the compute people.
Mm-hmm.
So, CoreWeave, NBIS, um, IREN. I think they all play in that like that neo cloud space.
Yeah.
So the compute providers to me could be the next big winners because if I'm not mistaken, according to Jensen Huang, we just don't, there's not enough compute to go around. And the demand for compute is getting higher as the usage rate for AI continues to increase. So if you're talking about another bottleneck where supply and demand might start causing some friction, you know, the compute names might be the names to take a look at. So I think NBIS got a made a big move in the after hours just now, if I'm not mistaken, because that one guy who runs that one of the who was he a former employee of OpenAI?
So NBIS.
No, yo, NBIS. So there's some guy named like Neopold, some dude. He runs like a I don't know if it's a hedge fund or if he runs some sort of like investment fund. And
Mm-hmm.
anytime he reveals his positions, people start buying. Like
Mm.
go look at TE and then go look at NBIS. I think NBIS is up. They closed at 208 today.
Yeah,
Now it's trading at 228 in the after hours because I guess he just revealed
he's holding it.
yeah, he just revealed a position. So I don't know his name. I forgot his name, but I think the Neo Cloud folks are going to be the biggest winners. My question is, who is going to be the most efficient in being able to deliver what people need? So
Yep.
I
Yep.
think I
Yep.
think the next bottleneck would probably be compute and power. To me, those are going to be the next big things.
Yep. And that's what I was thinking too. Is like I think computing power, and then I guess in the midst of all of the delivery of that power too. So again, we got to think
Yep.
about that too. So all of that stuff is going to come into question later on. But we are literally seeing the progression of like the AI and chip and all this stuff. Like literally everything is moving down that infrastructure that we keep talking about, right? So the thing is you just got to be ready when the moves start happening. Either you're already in a position or you kind of already know what's happening and coming up next. So again, it's those some of those moves are have been crazy, man. The other thing was Zscaler. Zscaler for some reason dropped like 31%, I think, after the market sell off. Not sure what happened there because I was trying to look and see like what did they not report a
Yeah.
good
So
number?
yeah,
Did they
the thing that I heard with Zscaler was their forward guidance was a little bit tepid. And if I'm
Mm,
not mistaken, going into this earnings call, the stock has made a pretty significant move. So I think it went from what 114 to almost 200. So
yep.
when you make in less than in about a month, so you make a move like that, and then you give tepid forward guidance, you're gonna get penalized. So I
You're gonna
think
get
I
penalized
I think
heavy.
they got penalized pretty heavy for that. So yeah, and I think also too that they still have to compete with some of the bigger players in cybersecurity, like Palo Alto Networks.
Yep.
So as a smaller company, you have to be on it. And again, you miss on an earnings call after a monster move from 114 to almost, I think that they hit a high of what, 190?
Yep.
Yeah, of 190 in about a month. You got
Mhm.
to deliver on all fronts, and I think they were not able to, and then they got penalized. So hopefully they can figure it out. But yeah, some of the smaller cybersecurity names they're going to be a little bit more sensitive to disappointing numbers if you don't get it right. So
Yeah, they're definitely gonna keep getting punished, basically.
yeah, so
Um, but let's talk about the big boy, man. Snowflake, 30% in after hours trading following the first quarter earnings beats an announcement. Get this of a massive $6 billion multi-year commitment with Amazon Web Service. I mean, talk about a good news for them, you know. So again, let's dive into those numbers, man, and see what we can find in there.
yeah, so Snowflake was a name that I've been looking at, and I was in it last week, traded it, made I don't know, decent percentages, but I've never been the type to always just let things roll through earnings,
Yeah.
especially because I think today the stock was actually down. So if
Hmm.
it, even if I was still in it, I probably my trailing stop would have probably hit. So it is what it is.
Yeah.
But one of the questions with Snowflake was, do they provide mission critical software in this whole AI, ecosystem? That's
Yeah.
that's gonna if you're looking to invest in a SaaS company with the adoption of AI, to me, the question that you always have to ask yourself is this a mission critical business?
Hmm.
And if it is mission critical, do they rely on a per seat model for revenue or not? And Snowflake does not rely on a per seat model. They rely more on a per usage model. So the more you use it, the more you pay,
Yeah.
which can be good or bad, right?
Right.
So for many months, if we look at Snowflake, Snowflake has been one of the most penalized stocks in the SaaS world over the last, I'd probably say, year. Because if I'm not mistaken, Snowflake hit a high last year of $280 a share, and we closed today at 175. Now we're going to start approaching that 280 pretty soon because right now it's trading around like 240. So the market obviously saw something that Snowflake is providing that does provide reliable usage and mission critical service to AI companies.
Yeah.
And they beat on revenue, 139 billion. I think the biggest thing that helped the stock was forward guidance. It says that they gave full year forward guidance of 5.84 billion, which was up from what they estimated at 5.66 billion. We talked about the Amazon deal for $6 billion over the next 5 years. And it says Snowflake now has 779 customers that are spending over $1 million annually with them. And they have a 126% net revenue retention rate as of April 30th, 2026. So it sounds like we're getting a very similar narrative that Datadog gave because Datadog kind of plays in that same sandbox with them. Databricks as well, but Databricks is private. So Snowflake looks like, they found something and the stock responded. And I am completely angry that I am not in this name. And I gave a whole analysis yesterday on my Instagram page. Um,
Right before right before they announced.
oh my God. Like everything, the only thing that didn't score well for the company was their valuation.
Mm.
But now, yeah, sheesh. Talk about a missed opportunity.
Happens, man. It happens when you stay disciplined. Sometimes you miss those crazy moves.
Yeah, I told myself, I said, let me see what they say on the call. Let me see how it responds on earnings. And I mean, if it was up like 8%, 9%, I'd be like, all right, I like what I heard. But 35%, that's a that's
That's a
a
big move.
that's a big move, man. That's a big move.
The other thing too, I was gonna say is you also got to think about those type of moves. Is probably some shorts, right? People have to cover their
Yes.
positions
Yep.
too.
That's
So
probably what it was. Yeah, lots of
yep.
short covering, I would assume so.
Hmm. Hmm.
Yeah.
And even if you look at Micron, I think there was a lot of short because you see like it went right back down to like that 900 area again as soon as the market opens. So something similar to that also.
I'll also say this too, as well, is that you're starting to see some days when the chips don't do well, like let's just say people are taking profits from chips, you see a bit of a rotation into software. Like go look at App 11. I think App 11 was up like almost 12% today. And I think the only name that's down, I think right now, CRM is down. They reported earnings today. I didn't look at the numbers, but no, actually, CRM is not down. CRM is, let me check I'm not looking at live data. Oh, I'm looking at service now. Yes, CRM is down about like a couple percentage points after hours, but ServiceNow is up after hours by about $3. So there's some software names out there that I would not put them in the garbage bin just yet. But the biggest thing with these software names is, if you have a good business, execution and hitting on all fronts is going to be very, very important.
Facts.
And if
Yep.
you don't, you're going to be penalized. So ServiceNow makes a very compelling to me. Under 100, I mean, that would have been a better opportunity to get it, but anywhere between 90 to 100, I think it makes a compelling case if you're willing to wait. Because I don't know how long this is going to take for this story to turn around, but we got to see if everything the CEO has been talking about, everything Jensen Wong has been talking about, if that, how long is it going to take for all that stuff to play out? So
Yep.
I would put ServiceNow on my radar.
Absolutely. I mean, even with that, like we're still not talking about the other parts of quantum computing and all this stuff. Like that's a whole different other area too. On top of this, all this thing that we talk about when it comes to like what Jensen Huang was talking about. I, I'm kind of curious about the Dell move, man. Like looking at the contract, I think they won a contract with the government, right? So Dell won a contract with the government. I think it was like $9.6 billion, something like that.
Hmm.
I mean, that's a huge, huge contract. But I guess for me, it's like let's explain to the people like where does Dell kind of fit into this whole narrative that we're talking about when it comes to like the AI, the chips, and all that stuff. And why is this why Dell is becoming now as a crucial name? Because you guys think about it, man. If you look at Dell over the past like maybe like the last 10 years, they haven't really done a lot, you know. But all of a sudden now it's like they become a very, very crucial. It almost reminds me of SanDisk. Sanders, if you look at Sanders' chart for like years, ain't nothing happening there.
Yeah,
And then all of a
SanDisk.
sudden,
Yeah, Sandix. I think I don't know how long Sandix was public, but they had just recently became public again because
yeah,
they got spun off from WDC. But
right,
as far as Dell is concerned, the one thing that I knew that they were needed for were server racks for
yeah,
the GPUs. Like that
yeah,
part of the business I understood, but this contract they got from the government has to do with software licenses.
hmm,
And I'm completely oblivious to where Dell plays in the software space. Like
yeah. I'm kind of confused with that one too.
I'm confused with that one. I've always looked at Dell more as a hardware company. Like they make the PCs, they make the servers and things like that. But this is a contract for software subscription. So I don't know. Maybe they're a multifaceted company and that's a part of their business that people haven't really,
Yeah,
you know, doesn't get a lot of attention. But now we understand why Mr. Trump said go buy Dell.
yeah, yeah, yeah. But it says here that under this multi-year deal, Dell will act as the single award procurement hub to streamline and centralize Microsoft software licensing, cloud subscription, and software assurance. So it seemed to me it's almost like they're going to create a product that's specifically going to be housing Microsoft software licensing, nothing
Mhm.
else. You know, they said the products covered. It integrates major software licensing across both classified and unclassified network, including Windows Enterprise, Office Professional Plus, and tiered Microsoft 365 bundles. It also includes some integration with Microsoft Azure to transition Windows into the military's broader war-fighting cloud capability framework. So it's almost
Mm.
more of an integration rather than actually creating the software. It seems like they're just housing the software. They're creating products that will house the software, not necessarily like creating a software from scratch.
Gotcha. Okay. Yeah. Dell has, I mean, some of these legacy names have just come out of nowhere. Like you come back from Intel, you may had a comeback from Dell, you're seeing a comeback from Oracle made a big move after I think it was last year. So some of these like old company legacy names are finding ways to reinvent themselves in this new
Yeah,
age of AI, and it's you can't sleep on anybody. And I think if I'm not mistaken, HPQ might have reported today, and
HPQ.
is it HPQ? No, did they report today? Yeah, I think they reported, and they were up. Yeah, they were up 4%. And I want to see where
Sheesh.
are now. I don't know if they made an after hours move. Yeah, they made an after hours move to 29, but it came right back down.
Came back down, yeah.
Yeah, so somebody said something on that call
Yeah.
that people didn't like.
Came right back down.
Yeah, so but yeah, man. Yeah, I think to me, I'm almost getting to a point where it's kind of like, where can you look for the AI story for stocks that haven't run 200, 300, 400% just yet?
Yes. Yes.
Like that's something that it's hard to find now because everything in that space is like reaching all-time highs.
Yeah.
Shane
Yeah.
says it's
And that's
ABGO next. Maybe we'll see. Yeah, we'll see.
yeah. Yeah. And I mean, like that's what I was saying. Like, what is the next place to start placing your money, right? Because if you look across all the AI names, like you said, a lot of them just ran like crazy. Like it'll be too expensive to buy it now because you never know if it's going to run again. So, for example, that whole upgrade for was it Snow or MU that's like $1,500 or $1,600. I mean, you look at that as like, do you really think it's going to happen within the next 6 months, within the next 3 months? Is that number is going to get hit within that time? If something happened with the company, if there's any pullback, so it's almost like you have to be a little cautious into should you actually jump into a trade right now that it ran like all this time. I'm almost hesitant now to like my main thing I probably been watching right now is like the Drum ETF, like something like that. That probably like hasn't really. I mean, it was just inception this year, like maybe like a couple of months ago, right? But those stocks have moved like crazy. Those ETF have moved like crazy. So that might be some places where you can find value for now that you can kind of put some money in and be able to kind of sit back and just watch it move. But I'm with you on this, man. Like some of those stocks have ran like crazy. So it's almost like you have to like really be technical at this point rather than looking at the fundamentals because yeah, it kind of exceeded that. We already know there's value in AI basically in the chips and all that. So I don't know, man. This is gonna be that time where you have to be really really picky and and where you put your money at.
Exactly.
So it's going to be interesting to see where we end up from here. But this is interesting. Robinhood is allowing AI agents to trade for users and make purchases. I mean, I feel like we almost kind of like knew this was coming somehow. I think I've seen a lot of people creating like agents to be able to kind of go out there and find stocks for them and all this stuff. But for Robinhood to allow agents to actually be able to create stocks for or create trading plan and be able to trade for users, I don't know how many people are going to use it. I don't know how successful this is going to be, but I think it's a very, very interesting and forward thinking when it comes to technology and stuff. So, what do you think about that?
Yeah, I haven't seen all the details about how they're going to roll out this service and what they're going to be looking to do. But I think for people that are going to use this service, the one thing that I will say is you have to really learn how to prompt. Like if you don't prompt well, your results are not going to be that good. So you have to give it, the more detailed you are in the instructions and the more detailed you are in the prompting, the better your results are going to be long term. So um yeah, I think that they said they're also going to give people like it's going to give you like access to like make purchases and pretty much just kind of do what you tell it. And
Yeah,
I think it's a good service, especially for people who might want to trade, who might be busy, who might not be able to sit in front of a computer all day. I think that's a good service. I thought the stock would get a little bit more of a move higher, but it didn't. So we'll see what the adoption rate is,
yeah,
and
yeah.
see if it's something people actually use. Because one thing I do know with people are very fickle. So if you do one trade and it goes bad, I pretty much people are not gonna they're not gonna want to do it again.
They're not gonna want to do it. Yep, yep,
No, I'm
yep.
not going to do it again. Yeah, it reminds me of people that jump into trading groups and then they get one bad trade and then they leave.
They're out. They don't want to pay the dues.
Yeah, so I think it's gonna. I think to me, I really think that it's gonna have a very similar like trend. So
Yeah,
yeah, we'll see how it rolls out. But that to me is like I said, I'm not surprised, but I guess I'm surprised that it's already here.
yeah. I'm not surprised it's here. I'm just surprised that they are actually including credit cards as part of. So I was reading through it and it said like
Mm,
they're actually gonna have people actually be able to use credit cards. I was like, damn, we're actually gonna put people in even more debt with this thing. Huh? So because hey, people go out and get multiple credit cards and throw it into trading. I think that's one of the things that's stopping people from using credit card right now because it's not allowed. But I honestly think if they allow credit card to be used in some platforms, people will use credit cards to trade.
yeah. I think that
So,
one of the
but
things that they go ahead.
no, go ahead.
No, I think one of the things that they mentioned was, at least for now, you can only use it for long equities. So
Mm,
no shorting, no options,
good.
no crypto, no prediction markets, at least not yet. But maybe those are things that they roll out later on. So,
Yeah, yeah,
I think it's not to me it's not a bad idea, but I think just like anything in the wrong hands, it can do more harm than good.
yep, yep. Like you said, you gotta learn how to prompt. You gotta know how to program your AI properly, right?
Yes.
And I mean, I'm pretty sure they're gonna have like pre-built prompts and all this stuff, but it's like you still have to be able to do your own thing because, yeah. But we shall see, man. I'm seeing some breaking news right now that the U.S. have striked. There's something in the Strait of Hormuz that's causing issues now. Oil is jumping out the market after the U.S. attacked the Strait of Hormuz. So again, man, we shall see how it looks like. We have the inflation data coming, and then it looks like we have fresh attacks that's happening right now in the Strait of Hormuz. So
Okay.
this is going to be very interesting to see exactly what's going to happen tomorrow. Oh my goodness, it's there's so many things happening, man. This is crazy, but we'll see. We'll see how the market opens. In tomorrow morning. Oil. I think. Let me see. Futures remain unchanged. I don't see the futures dripping or anything like that crazy. It looks pretty steady to me.
Yeah, it looks
Um,
pretty much flat.
yeah, there's nothing really happening right now, but we shall see, man. But other than that, let's look at some of the economic calendars coming up for next week. I think, like I've mentioned, tomorrow we have the inflation data coming up. The PCE early morning at 8:30 a.m. That's going to be, we'll see. This is going to be reflected based on April, on the month of April, right? What happened in April, all this craziness that happened in April with all the oil and all this stuff, will those numbers show here? I don't know. So we should keep an eye on that. There's also personal spending that's coming out tomorrow. Also, then we have the initialist jobless claim. Friday we have a bunch of Fed speakers speaking, but there's no major news that's coming up at all. And then finally, on Sunday, May 31st, Federal Governor Christopher Waller is going to have a speech, 8:30 a.m. And also Federal Reserve Jerome Powell is going to accept an award for something at 8:30 a.m., 8:30 p.m. on Sunday also. June 1st, there's not a lot of stuff happening. June 2nd, there's not a lot of stuff happening. So pretty much the first week of June, there's no like major news coming up that week at all. So it's gonna be pretty much quiet. So between tomorrow and Friday, this is gonna be the last couple of days of trading for the month of May. So we shall see how we close this month. And this is the end. This is almost the yeah. June is gonna be the end of the second quarter. So whew, we shall see what happens, man. Any tips, any news, anything you want to offer to the people right now before we close for the day?
Yeah, the only thing is, I saw that oil was below 90 a barrel. So we'll see if that helps some of the inflation data moving into the summer months. So,
Yeah.
we're talking about August through September. Um, to me, again, I'm not bearish. I'm fairly bullish on how the markets have been moving. Um, I saw a 60-minute interview with Andrew Ross Sorkin, who's
Mm,
talking about that a crash is coming, right? I guess he wrote some book called 1929, and he's talking about how some of the things that played out in 1929 when we had the Great Depression, starting to see some similarities in today's, society.
yeah.
The only thing I'll say to that is until the bond market starts getting to a point where risk is being elevated, it's anybody's guessing game at this point. You know, everybody can make predictions, but it's just one of those things where no one knows when these things are going to happen. Is it a
Yeah,
year from now? Is it 2 years from now? Is it 3 years from now? We all know the market has cycles, and we know cycles do come to an end. They reset, things get repriced, and then we start all over again. So,
yep, yep,
um, I just want investors to understand that things are good now, but things don't stay good forever.
mhm,
So, and no one can predict when things are going to get ugly. But I always tell people, watch the bond market. The bond market will give you the signs before the stock market does.
yep,
And, you don't necessarily have to completely sell everything you have unless it gets really, really, really bad. But have a strategy to take profits along the way if you've been in these names that have just gone parabolic.
yep,
Like, I always see these like Twitter memes and things on like Trends and X where people will be saying, "Oh, if you would have bought SanDisk, you would have paid $10,000 in SanDisk, and you held it to today, you'd have
yep,
X, Y, and Z, blah blah blah." Like that's all good and dandy. Like, don't get me wrong, but nobody in their right mind will put 10,000 in SanDisk, get to 100,000 or 200,000, and not sell anything.
yeah,
Like, like no one in their right mind is going to sit there and
yeah,
be like, "I'm not selling anything."
yeah, yeah,
Now, unless you're really, really rich and that doesn't mean anything to you, right? Then maybe you do. But I come from a world where if you're a portfolio manager or you're managing money for other people, there are steps you take profits along the way.
yeah,
Maybe you don't exit the full position, but you trim some, right? So just I just want people to just be like, don't think that this thing has an endless runway. Could have a long runway, but it's not endless.
it's not
So
endless.
just make sure that you don't, get caught with your pants down in the future because you decided to just hold through everything. So those are my parting words.
Yeah, I mean, I agree with you, man. I mean, case in point is like when a lot of people who started trading in 2020, we just thought like the market just went up. Everybody would just all you have to do is buy a call, and everything went up. And then September hit, and we have the correction, and everybody was like, "Oh my God, the market actually goes down." So it's like there will be a time. Ooh, there will be a time when the market is gonna change. So you always gotta anticipate that. You can't just be sitting here thinking like it's always gonna be the same way. So
Correct.
I definitely agree with you. Now, will we have a crash like 1929? I don't know. I don't think so, but it's a possibility. But I
Yeah,
feel like everybody always has a prediction when the market is running crazy like this, right?
correct.
Everybody always have a prediction of putting like all this, connecting all these dots and all these different things. The problem with market is the market sometimes are unpredictable. Things doesn't happen always the same way.
Nope.
But with all that chaos, it always have the same result. What I mean by that is, even if we have a pullback, the result always going to be the same. The market is always going to roll back and go back up, down again. So it's like all of those chaos, all those different things that we experience throughout the market times, like it's unpredictable, but yet it all at the end have the same result. And I think we kind of talked a lot about this during the beginning of the year, even last year. When there's a pullback, it's a good time to start averaging in. Start buying some stuff here and there. Don't go all in, don't go all out, but just start looking at some of those names that you were looking that was running like crazy that you were interested in, but you couldn't buy. Now would be a good time to start making those lists again. Now we're saying this because I don't know when the pullback is going to happen. It's going to happen, right? That's the thing in the market. If it says it's going to go down, it's going to go down. If it's going to go up, it's going to go up. The crazy thing is, you will never know when that's going to happen. You're right either way, but you're never going to be able to time it.
No.
So yeah, that's my only feedback, man. It's like we might see a pullback, but that's a good opportunity. I always say it's a good opportunity to start looking at those stocks that you were very, very interested in when it was running like crazy.
Yeah.
So
Like the
yeah.
war, the war presented some good opportunities, right?
Hmm.
And it was one of those things where it's like we didn't know when the war was going to end, but for the most part, this was an energy story about energy, right? There are businesses who aren't dependent on petroleum.
Right.
They're just not. Like, so And when the war kind of quote unquote ended, I don't know what the status is now, but a lot of those companies pretty much recovered. Now, airlines and other companies that are petroleum dependent, those
Yeah,
are
yeah,
those are more directly affected.
yeah,
But does the war or the Strait of Hormuz, does that affect, you know, Nvidia's business that much? Probably not. So those are the things that you got to sit there and just analyze is when there's conflict or there's an issue, there are certain things that you can diversify away from.
yeah,
So now, if we have systemic risk, you can't diversify away from systemic risk, like COVID, right? Like the Great Depression, the housing crash, like that is crisis
yeah.
that
The dot com
affects,
and all that. Yep.
yeah, that affects everybody. So that's systemic
Hmm.
risk. You can't diversify away from that. But certain isolated incidences where it might affect a certain sector, certain stocks, things like that. Those are the things that you can kind of prepare for and kind of diversify away from. But right now, this is the industrial revolution part two.
Yeah, pretty
So
much, pretty
yeah,
much. Yeah. With that being said, man, you gotta stay sharp out there. Keep your wises sharp. Manage your risk properly. And remember, man, the goal is not to like chase every move. Like when you see those stocks running and stuff, the goal is not to chase it, but understand the bigger picture and prepare yourself for those moves before it happens. So keeping an eye on what's the next sector, what's the next move, what's the next logical progression in things when it comes to this market that we're seeing right now. That's what you need to focus on next. With that being said, man, we'll see you guys next time Friday on the Wall Street Rundown. If you guys have any questions, please make sure you guys share with us and let us know. Please share this show also with the people that you think will be beneficial from this. But with that being said, man, you have a good night and see you guys on Friday.